Hello to everybody, our dear subscribers. FutureTrend channel is back to you after a small period of silence. We are ready to present our version of trading of major currencies and world financial markets for the date of 7th of June 2019. Today is really a very interesting day, the day of publication of probably the most powerful United States economic numbers, United States Payrolls report. But we should understand that not this type of economic releases is driving the market at the moment. There is some other ideas of how to trade major currencies, not only to rely on the United States non-farm employment change on the so-called United States Payrolls report. Of course, we should take into consideration the final result of these numbers, and we'd like to note the fact that after the ADP was much weaker than expected during this week, on the publication on Wednesday, we should understand that today's expectations are much lower than expected. As you know, a lot of analysts predict that absolute numbers of United States non-farm employment change will fall from the level of 263 to 180. Despite of that, the unemployment rate will be at the same level of 3.6%. As regarding average hourly earnings, the market predicts slightly better numbers comparing to the last report, improvement from the 0.2% to 0.3%. But once again, not these numbers are is a driving force at the moment in the currency market. We suggest that it's a trading policy of the United States is more powerful and more influential at the moment. And in this respect, we should understand that today's news regarding the negotiation process between the United States and Mexico representatives should drive the risk aversion sentiment in the currency market right now. And in case of deepening of these relations, in case of a first round of punitive tariffs against Mexican imports of 5%, of course, it should further worsen the situation in the risk environment in the financial markets. And in this respect, we should understand that, first of all, probably the Japanese yen will be the most beneficent type of currency, as well as the Swiss franc as well, so-called safe haven currencies. Let's start from the euro dollar. Euro dollar at the moment is trading around the level of 112.65. Two times during this week, the pair tried to break its first reliable resistance around 112.30. It even broke above the so-called medium-term downtrend line in the currency, but without any kind of success, as you could see, without real kind of closing on the daily basis above that trend line. More important barrier is located around the moving average 200 daily line that's located today around 113.66. And that's why a lot of strategists will try to cover existing longs in the euro dollar around that level, around the level of 130.66. So we are not an exclude from this list. As you know, we are long at the moment at 111.60, and we also will try, in case of testing of this level of 113.60, we will try to cover existing long, let's say, initially. What else? Dollar yen. Our strategy is to sell on any kind of upticks in the currency to the so-called level of 110. We should understand that a moving average level is a moving average 200 daily line. It's slightly higher than this psychological resistance around 111.30. And for those of you who still predicts the dollar yen lower from a longer term point of view, we suggest that it's allocation of probable kind of stop loss on existing short positions. But again, any kind of upticks, even to the level of 109, where is the fast reliable resistance at the moment, is a chance to enter new shorts in the currency, because we suggest that, taking into account all the considerations with the risk rewards, with the risk aversion sentiment, trading discrepancies between United States and its major trading partners like Mexico or China or European Union. All in all, taking into account that the United States economy is not doing well at the moment, and it's time to cut the rates in the United States, all in all, from that point of view, the United States dollar should lose its upside momentum, should lose its value in the foreseeable future, and from that, basing on these types of considerations and suggestions, we think that the dollar will be lower during the course of 2019. Sterling. Sterling, here, as you know, we still keep our long position in the currency. Of course, not everything is okay with the sterling at the moment because of Brexit. And while so, the pair should remain vulnerable in the foreseeable future. There is a kind of strong resistance around the psychological important barrier 130. Let's say the first important resistance is located around the location of moving average 200 daily line 129.42. Also, we should acknowledge the fact of existing longer term downtrend 130.40. So while below that line, let's say while below resistance between 129.50 130.50, the cable should remain vulnerable to the downside from our point of view, and only the weakness of the United States currency could save the bullish momentum in the cable as well. As regarding the dollar Swiss, from our point of view is a sell on any kind of upticks closer to the current downtrend line at 10055 allocated at the moment. Also, we should recognize the psychological important resistance of the parity level. That's why we suggest that we will use an opportunity of a uptick on the currency closer to the parity level to enter new shorts in the currency. And also don't forget that moving average 200 daily line in the dollar Swiss right now located around 99.61. So there is a fresh kind of fast one resistance right now. We don't want to put a lot of your attention on the euro crosses, because here the situation is really a little bit tricky. Euro yen and euro Swiss, for example, is in a clear downtrend, and we should understand that euro Swiss, the downside momentum probably is should be limited by the Swiss National Bank, which should enter the market with fresh interventions in case of dipping closer to the psychological important support in the euro Swiss located at 110. Also, today is a day of publication of the so-called Swiss foreign currency reserves. It's already published, and it will be quite interesting what is the actual numbers, because in case if the situation is really so that the Swiss National Bank still trying to limit the downside potential of the euro Swiss by a fresh kind of buying in the currency of these types of currency, of course it should prop up the currency in the near-term future. But of course the overall situation is not at the moment is not in the in favor of bullish momentum of the euro Swiss. So from that point of view, as you know, 111.95 now the currency is around 112. That's the fast reliable resistance, but more important resistance is located around, first of all, so-called downtrend line 130.50. all in all, this line is really very important resistance. So any kind of upticks of the currency closer to that level should present for you a kind of fresh ideas to sell the currency. As regarding us, we were more or less lucky to buy the currency at 111.20 on a dip closer to the longer term uptrend line that's located around, let's see, by the way, where is it? Yes, it's exactly at that level. So you could put a kind of stop loss just below existing shorts of this year, existing lows of this year, and expect any kind of rebound closer to the location of moving averages 100, 200. That's located today around the level of 130.20 to lock in profits. So probably we will change the situation here, and we will try to cover existing longs on the possible retesting of the level 113. Euro ruble, here the situation in the arms of probably the euro, because Russian ruble is more or less stable at the moment despite of the falling of the energy prices in the world on the world markets. As regarding commodity block of currencies, this morning we enter a fresh long position in the dollar Canada. Why we did so? Let's see the chart. We did so because we are testing at the moment still not break on the sustainable basis the so-called uptrend line in the currency. The uptrend line, that's if we look at the daily chart, that was drawn from the lows of 2017, by the way, excuse me, this is much longer term. So from the lows of September 2018, and while below that level we expect, while above that level we expect that dollar Canada could reverse its current course to the downside, from the downside to the upside. Also, don't forget that 132.69 is location of moving average 200 daily line, and that's why, taking into account that we expect not so good Canadian employment numbers today, we expect that dollar Canada could rebound to the level of 135, and that will give us an opportunity to cover this existing long. And finally, a few words about the exotic currencies. Here we don't have any kind of positions, but we pay your attention on these types of currencies because they are much more vulnerable, much more volatile, and that should give you a chance to earn some money. But here the situation is not so easy, and of course, and if we have more volatile currency, of course, that means that the risks are much higher. So if you take any kind of position in these types of currency, for sure you should have a very close stop loss. That's our rule, and that's the rule for your prosperous kind of trading. And as regarding today, the situation here is abruptly different comparing to the major currencies, because as you could see, these risk-sensitive currencies like Turkish lira or South African rand are quite weak at the moment. It's looking quite weak. As regarding dollar ZAR, you could find the clues in today's analysis of Commerzbank that the situation here is driven by domestic factors. The independence of the South African central bank under the threats at the moment, then that's of course it's not boding well from the point of view of investors in the currencies. Also there are economic weakness in the South Africa, also the prospects of low interest rates and political situation all in all, excuse me. Not everything is in favor of strong South African currency. As regarding the Turkish lira, also Turkish lira find a kind of interim floor against yesterday's this week, let's say so, this week plump to the level of 565. All in all, if we look at the daily chart, there is a stronger support around the longer term uptrend line in the currency that's located a little bit lower than moving average 200 daily line at 550. So all in all, 550 is a kind of quite important support barrier at the moment. Of course, you can also try to draw a kind of medium to longer term downtrend line, and that's located around 6.20, 6.15. So you could use a kind of move to that level to enter a fresh long position, a short position, excuse me. As regarding dollar Swedish crown, here the situation is much more stable comparing to South African rand or Turkish lira, and here we suggest that it's time to sell the pair on any kind of upticks to 950, because a current downtrend line is located around that level, and take into account that the overall situation regarding the United States currency is standing a little bit to the downside at the moment. That should give you an opportunity to enter a medium to a longer term shorts in the currency. But again, of course, you should keep your tight stop loss with you. As regarding your short-term buying opportunities, 930 is the first kind of interesting support at the moment. Moving average 200 daily line is located a little bit lower, 917. That's why, by the way, we are ready whether to sell or to buy the currency with a close stop loss. As regarding the Bitcoin, it's not our preferable type of assets to invest, but anyway, also here for you is a kind of our trading advice. Thank you, our dear subscribers, that you don't forget about our channel, that you still with us. Thank you for all of your considerations and supports of our channel. Thank you, take care, and bye-bye. It was your FutureTrend channel.